All right, let's come back home and talk about the blockchain economy and opportunities there. Well, Chief Executive Lisa Wade joining us from DigitalX. Lisa, good to see you. We haven't had you on the show for a while. Now, you do have some developments in the works with the DigitalX Asset Reference Token Fund. Tell us about this.
Yeah, so on Friday we launched our new product, which is a fund that invests in asset reference tokens, and they are basically tokenized representations of real world assets. And given everything that's going on in the space, we named it the fund the DxART, and the first iteration or the first pool as the Heart Fund, which references the MiCA regulation in Europe and their talk around asset reference tokens. So we wanted to ground it in regulation.
So this is a housing pool for the fund, which actually is with a focus on fractional ownership of housing. So clearly aimed at, we know affordability issues here in housing, but this is a step towards that.
Yeah, absolutely. So we partnered with a company called Bricklet earlier on in the year, and Bricklet create the fractional ownership of houses in what we call a co-ownership deed, which allows us to take a stake in the house, which enables people who've been locked out of the deposit market to get a mortgage from a bank, and then we effectively give them the deposit, although that's via taking the equity stake in the house. And we've created a pool for that, so we can help as many Australians as possible, really.
All right, in terms of funds management and the offer, what it attracts, how it attracts investors, what is it? What is the attraction then for an investor in this type of fund?
Oh, well, basically financial returns, to be honest with you. We've structured the product very deliberately not to compromise returns for the social impact or the new technology. So basically it's got the Heart Fund has a 6% yield, plus the co-ownership gets a 20% stake in the house, so we have the capital gain, and then the benefits of the tokenization can really start to shine through when portfolio owners can start to see that they get transparency over the NAV movement as soon as the payments go into the token, and they can also see the NAV as it moves in their wallet. So there's this transparency piece, and the bit that nobody will ever see but we love is just around, as fund manager geeks, this ability to reshape risk because we have a greater transparency over the financial asset. Therefore, we're able to fund it in a different way, which leverages the returns for the investors. And the way we like to say it is it's cheaper, smarter and faster to make the investment. Therefore, we can pass that through in higher returns.
So you look at those returns, you get sort of fees from occupancy?
Fees from occupancy.
And obviously also longer term capital growth.
Yeah, that's right. So we effectively own a 20% stake in the house. For the shared value piece, the homeowner does get the opportunity to buy back that stake, so they can consistently buy the fractions back off us, so they can start to own 100% of the house. But in the meantime, our investors get the benefit of the uplift in the capital gain.
And what sort of seed capital have you got there?
So we've seeded it off our balance sheet, which has been really exciting over the last 6 months. So we've helped 4 Australians into houses so far, and now we're looking for a cornerstone investor for the fund to really boost that. And to one of the hardest things with launching a new fund is that deployment of capital. So to fast track the deployment of capital, we're running a campaign called 1,000 Faces, where we're looking out for 1,000 Australians or families who want to get into the property market and get a leg up and be able to afford a deposit. And with that, we will share with the world our investment process so that we can find the houses that match the people and help Australians into the houses. Before
you came on, you were telling me you were at an event a little earlier where you sort of pitched that idea. What sort of response did you get?
Oh, we have had, where we've been sort of mentioning it to people, overwhelming response from sort of young professionals who are really struggling to save that deposit in, we all know cost of living has gone through the roof and everybody's dipping into their savings just to live. And so we've had a really overwhelming response from people who, young professionals who just can't get into the market. And that, we really want to help everybody. And, we think that so far we've had an overwhelming response, and we're looking forward to reaching out and seeing who else wants some help.
Are there examples of this in other markets?
Look, there's a few popping up around the world. I think there was one in Atlanta in America the other day, and there's different types of models around whether it's buy to rent or rent to own and all of those types of models. Why we loved Bricklet, actually, I don't really talk very much. I used to be head of community assets at Bendigo Bank, and it's something we tried to do back in the day, and there was just some glitch around the regulation. And why we love the Bricklet model is it actually, the economics are that we're investing side by side with the homeowners, and we believe that we're sharing the value with them. And the numbers didn't really work until the technology came into play. And so I love it because it's a perfect use case for blockchain to show the social good we can do. And actually the economics allow us to share that value with the homeowner and really participate in their financial journey.
What's your ultimate view then in terms of on-chain tokenisation, and I guess as it compares with what we've got existing, that sort of financial infrastructure that's in place at the moment?
Well, look, as an investment manager, it's a financial revolution, and getting super geeky, that's around creating data as an asset class. And then, people like the World Economic Forum are talking about 10% of all real assets in the world being tokenised by 2027. That's not that far away. And we have this super geeky term inside of DigitalX that we call radical fungibility, which is asset tokens can be interchanged as though they're money. And with all of the other new technologies that are coming through, like automatic market makers for all the finance people, options traders have been doing that for years. With all of those combined technologies, we see this really amazing new world with frictionless finance. And if you look at our company strategy, we call it atomic investment, which is investment without friction, which we see will happen by 2030. So Citigroup call it the asset tokenisation as the killer use case for blockchain, and we passionately believe that. And I think even Larry Fink has been talking about that, and I think he even made some comments about that this morning. So I'm always happy to be on his page.
Yeah, absolutely. Okay, you're taking this path of fractional ownership in homes. So and you talk about the prospect of tokenisation into the future with those targets there. So what are some other examples then?
Oh, look, we can put it this way. You can tokenise and fractionalise just about any asset, and I can't think of one that you can't. We're working with companies around bonds. We own a small little startup which tokenises gold, and then you don't get the argument about Bitcoin being an inflation hedge. You can actually just use gold, and it just is more efficient in how you store it. And we can fractionalise blocks of gold. We're working with people that anything to do with invoicing. Literally, the use cases are unlimited, and we're happy to work with everybody that can come to us with a viable business model that can be tokenised. We've built in partnership with a company called Blockfold, a platform called Blockflow, which allows us to take, super geeky again, the data schema or just the data that sits behind real world assets, and anyone who has Xero can understand that from their bank statements. So literally anything that plugs into Xero, let's just say, we can tokenise and create a cash flow over it. We chose Heart as the first investment because we just saw the opportunity that Bricklet brought to the market to go early on that, and now the work is to build out the portfolio to give investors those opportunities.
All right, so as you say, you're looking for 1,000 faces there. Do you sort of have a timeline as to when you expect to close this?
Oh, as soon as possible. We've only just launched last Friday, so we'll be running that campaign over the next 90 days, and hopefully we can come back in 90 days and share some good news and some real stories of Australians who've been put into houses. We've already helped 4. We'd like to help 1,000.
Yeah, and when you're looking at the property itself, how do you actually choose that?
Well, that's the secret sauce. However, we are going to let people know what those criteria are. Bricklet, in this example, partner with the AMP. So the first step is getting pre-approved by the AMP. However, we don't want to say no to people if we can't get the property in the portfolio. So we will release our portfolio construction dynamics, which will be all major cities in Australia, apartments, houses, new housing developments. We're working with some developers, and people can come to us and we can give them a general idea of what will fit into the portfolio. And I think it's roughly, Darren, the CEO of Bricklet, told me, roughly 6 times your salary is what we can, the value of the house that we can get you into on this model.
Fascinating. It's sort of the future has arrived, hasn't it?
It's the brave new world, and
Yeah.
it's super exciting that it can benefit Australians as well as, we love helping investors and making money for them. That's our job. But to have the other side of it is really, really exciting.